Hello everyone, George DeSantis here with a look at the market for the week ending November 20th, 2020. And before we go any further, as usual, we'll bring up a disclaimer. And please take note that this is not an attempt to give any particular person professional investment advice, because I am not a professional investment advisor. I'm a psychologist and I do this for my own purposes, and it's shared on a YouTube video. Anyone can take a look, make of it whatever they will. We'll begin to take a look at the market by looking at some charts on the S&P for the general market, and then we'll look at some individual stocks as well. So here's a weekly chart of the S&P 500. Bit crowded, but I'll try to make it to explain it to you as clearly as I can. The first thing I usually look at are the moving averages. So they have a 4 exponential moving average here. So it'll be, in this case, would be a 4-week, because we are looking at a weekly chart, exponential moving average. Each bar represents 1 week's data, each candlestick in this case. All right, for those of you who are new. So this is a 4 exponential moving average above the 9 exponential moving average, and that is above the 30 front-weighted moving average. And this is a 50 period, or in this case 50-week moving average. And so insofar as moving averages are concerned, we are in an uptrend on the weekly chart of the S&P. Now, what confirms the uptrend also is the fact that the parabolic stop and reverse indicator, these white dots, they are now below the most recent bars, and especially the most recent bar, last week's bar. So this confirms the uptrend. Okay. Now I did plot bearish divergence of MACD from price, right? And I said that, this is concerning. And I was rereading some of what Jerry Appel, who invented MACD, had to say, in one of his books, Technical Analysis. He made a few interesting points. He pointed out that when we have an uptrend, we should be fast to buy and slow to sell, which makes sense. So what he means by that is we should buy on this MACD indicator, the 1226.9, as we would have done here when it turned bullish, or this was a conservative buy when it turned bullish. But if we were more aggressive, we would buy when MACD began to trend up from below the zero line. So we would get in either here at a lower price or here at a lower price. But we use the 1939.9 MACD for sell signals, as we would have done here when we started going down here in February, I think it was. Yeah, at the end of February. So with that in mind, I would say that in spite of this bearish divergence of MACD on the weekly chart, having reread some of what Jerry Appel's book has to say on it, I think we ought to be more bullish than I sounded in that email. We should still be bullish here. We have an uptrend. We don't have a sell signal here on the 1939.9 MACD indicator, and so we should remain bullish. If anything, because we hit the 2 standard deviation Bollinger Band, that green dotted line, we might see a little more of a pullback before the market continues to go higher. But I don't think we need to be overly concerned here. I'm saying that I don't think we need to be that concerned that this market is going to collapse. You know what I mean? Yes, we should pay attention to the divergence of MACD, but we need to look at if we get a sell signal here. That's when we should be more concerned. I hope that helps to explain this whole issue of the divergence of MACD. Let's look at a daily chart. So let's look at the daily chart of the S&P 500. You can see that once those moving averages crossed above each other here, we continue to have a nice uptrend. In fact, we the price of the S&P went above the 2 standard deviation line, close to the 3 standard deviation Bollinger Band, and of course that was so uh, overbought, that made the price so overbought that it pulled back on this so-called candlestick, which is called a shooting star, what I call sometimes the finger. And once we had this bar, we pulled back, we consolidated this gain with a pullback and consolidation period where we went sideways for the most part. Now we trended up a little bit again. We came pretty close to 2 standard deviation. Bollinger Band, we pulled back again. And this is a typical price action, you know. Now we should look at the 4 EMA versus the 9, the 30, etc. The 4 is still above the 9, and one of my sell signals, as many of you know, most of you know, is when the 4 crosses below the 9 on the daily chart. If I had the S&P, for example, I would look to sell it, you know, because that's one of my sell signals. It tells me there's a change in direction, an early change anyway. So now we have a pretty bearish bar here on Friday, and we have the parabolic above the most recent bars Thursday and Friday. So parabolic is saying we switch to a downtrend. If that is true, and to the extent it's true, we should move further down between the 9 and the 30, right here, between these two moving averages. So I would say we might get a pullback of about another 20 or 30 points on the S&P 500. That's quite possible. And if we do, we should find some support in here, because after the first cross of the 9 above the 30, as occurred right here, the first pullback into this area here is usually a very good buy signal. So we'll see if that holds true. Now, if we look at MACD histogram, we can see that it's trending down, but that's no big deal unless we had a sell signal on the 1939.9. So we don't have any sell signals here. So we may continue to see a correction, but it may turn out to be a very good buy signal. So this is a chart of the NASDAQ, the QQQ. And it's one of the charts that Jake Bernstein teaches. It's a 10-day moving average. This is a weekly chart. So this would be a 10-week moving average of the highs, 8-week moving average of the lows. And here you have the accumulation distribution line, Larry Williams line, and a moving average of that 57-week moving average. And as long as we have when we got 2 complete bars, actually these 2 complete bars above the 10-week moving average of the highs, and you had this trigger, this was your setup here, right? 2 complete bars, and this was the trigger, because this indicator, this accumulation distribution line, must move above its 57-week moving average on the weekly chart to trigger a buy signal when you get this setup. And sure enough, that was very prescient, and here's what we had since then. Now, when the market pulls back, when does Jake suggest you buy? Well, he buys at the once you have a complete uptrend here, and this is confirming it. The accumulation distribution line is confirming it is not below the average, the moving average. As whenever the price moved back down to the 8-week moving average of the lows, it's a buy signal. So you would have bought here, you'd have bought here, and of course we're still above the 10-week moving average of the highs. So if you look at that, and how about if we switch to the daily chart, and you could see that we had a trigger here because we had not only 2, but we had like four bars, right? 4 complete bars above the 10-day moving average of the highs, and we had the trigger, so this issued a buy signal. And now we're in between the 9 and the 8, you know, the highs and the lows moving average, right? And so technically, according to Jake, as long as we don't have across below the 57-day, in this case, moving average, this is a buy signal for him. It moves into this channel. This is called a moving average channel. So we'll see. That's a bullish, a nice bullish song to sing at this point, right? So here's Chaikin Analytics. I'm going to have to move pretty fast because, as you know, we only allowed 15 minutes on this. I have to see if I could upgrade that. But anyway, from bar charts, a company I get daily signals from, this company, PRSC is a symbol, is oversold, as you could see here, and all the other indications are very bullish. It's optimal. So I like that. I don't own it. The other one which I trade is NIO. That is oversold, believe it or not. One that I did trade and they gave it to me, then I traded and made money with it. It's now overbought, so I did sell it and took the gain. Another one that is oversold or close to it anyway is UTHR, and this is a biotech company, so a little more risky than some others. But you can see here that it's oversold by coming close to the 21-day average. And Alibaba is also oversold, although these two indicators here don't look very good and it's below the 200-day average, but Baba is now oversold and it's trending up. And they seem to be looking pretty good here. Another one that's oversold is Ramp. I don't know what they do. IT services, this one. SCCO is oversold, I believe, yes. And it's ticking up. And it looks like a pretty interesting looking chart. I went from beating by 7, beating by 10. And the last one is SSTX. This one, I believe, is oversold too. So I just want to point out those to you. So I just mentioned Alibaba, and you could see here on this stock spotter chart, Dr. Ayler's website, that it just issued a possible near-term bullish upswing here. And let me get another one for you. And here's Skyworks. You could see it's also signaled possible bullish upswing. And here's a very interesting chart. This is the SPY, the S&P 500, the ETF. And look at that nice upswing that it's predicting here. This is all swing cycle analysis, you know, Dr. Ayler's site. Pretty damn good. So this might confirm what we were looking at and talking about earlier. And here's what they're predicting for the Qs. You see they're predicting a move up here. So we might just get this rally around the Thanksgiving period next week. Okay, we only have a couple of minutes left. So what I will show you here is a list of stocks that I took from all of these lists, many of these lists, and try to look for the ones that seem to be oversold or almost oversold, you know, interesting looking ones for the coming week, in other words, right? So you have Best Buy. Now, they reported on November 16, but Barron says they will report on Tuesday. That's confusing. I don't get that. But look at these here. GE is looking good again. It's trending up, not oversold, but trending up. This one, PRSC, we saw earlier. Best Buy, JD, that Chinese company, UTHR again, Align, quite a few of them, ARKW, not quite oversold, but looks interesting. IDXX, I used to own this. Online, okay, that is the online retailers and so on. Here's an interesting one, Paylocity, and it looks interesting. Zoom looks interesting again, although it's continuing to trend up from the oversold region. And Peloton was up on Friday, and it seems as though it might go higher. Folks, that's about all we have. And I hope you have a good weekend. It's midnight. It's almost 1 o'clock on Saturday. So we'll try and do this again next weekend, but good luck in your trading.